Hi there, traders. Okay, now I just want to give you a bit of a week ahead preview here. There's so much happening this week. It's almost a shame they can't spread this week out over the course of the month because there's so many things bouncing from one time zone to the next. It's going to be hard for you to sort of keep up with what's going on. And really, this is where your experience, the time you've put into the market, analyzing the markets, understanding how, the central banks connect with the macros and how the technicals connect with those and how the various markets connect from equities to Forex to bonds, interest rates, all these things. This is where it all comes in and pays dividends, right? You wonder why you've gone through all this learning process. Well, this week we'll give you the answers. Now, let me just run through a bunch of things here, and I'll just give you the trading economics view and then come back to the actual numbers off News Squawk, I think it is. So let's just have a look at the details here. Now, came through Monday. Okay, I didn't really get much of a chance yesterday. Got caught up in a bit of risk management stuff. But the markets have stabilized, right? Pretty steady. Unemployment in the EU, pretty steady as well. So that sort of gives us a good foundation. And I'll come back to the charts here in a sec because I haven't seen the technicals looking so good in a long time and the cycle of what's going on. Just focusing on the really big stuff. What I've done here is I've gone up to included like second tier and above, right? That's what this data is, because primarily some of the data from some of the calendars doesn't reflect the high impact of this data, right? So the really high impact ones are the ones here in the with the red around the time frame. Obviously, the RBA interest rate decision. Okay, 0.5% expected today. Now, this is no walk in the park sort of stuff because 0.5 is factored into the market. What we're going to try and factor in or work out is, what's the statement going to be? There's usually a few comments as well. And as you saw from the FOMC last week, right, it can come down to the conference, the press conference at the very end where you start to see the action. So anyway, the RBA 0.5, I wouldn't be running in buying Aussie just on the interest rate hike because it's already factored in, right? So that's the key part. Now, one of the reasons why I went to the second tier number is because the Kiwi employment numbers are out, okay, on Wednesday or Tuesday night for some of you. Now, these numbers are a very high impacting number, obviously very important for New Zealand. I don't understand why they're not a top tier number when it's one of the big explosive numbers that you'll find out of New Zealand. So just keep an eye on that. Consensus, okay, employment change, improvement, and just a slight drop in the unemployment rate, right? Just understand liquidity on the Kiwi. It ain't awesome. So you got to sort of manage that into your sort of trade plan. Then as you come through the day, there's a few other building blocks here through the week. Aussie retail sales, this S&P Global Services thing is like, don't worry about that. Balance of trade, it's not really huge either. But retail sales is another key component to these economies. So at the moment, central banks have been talking about the two core numbers, inflation and employment. Now, right behind that is obviously you'd expect retail sales, because if retail sales drop, people get sacked, so it increases the employment. And if retail sales falls, inflation falls. If retail sales go up, inflation goes up. So it's closely tied to employment and inflation, right? It's been pushed down out of the news primarily over the last couple of years because we've had zero interest rates, inflation and employment are now exploding, so they get the headlines. But don't forget, retail sales is a key number here to keep a very close eye on. But so anyway, it's not like the epic part of the week because we have got a lot more bigger fish to fry. So, and you're going to have these other building blocks. So for the EU, is retail sales a part of it yet? It's probably not just yet, right? They're just getting, ECB's just starting to make some moves. So that's coming online. Now you're going to start to see some building blocks here. And what I'm talking about is sort of second, third tier numbers, or the ISM is up there as a first tier number. Factory orders, ISM non-manufacturing, durable goods. There's a whole bunch of US numbers here that build the framework for what's happening in the overall US economy. So make sure you keep an eye on that. The economic bulletin there from the ECB, I guess it's sort of probably worth having a look at. But when you put this up against the Bank of England rate decision, another 0.5% increase expected there from the Bank of England. That's going to be obviously a massive event for sterling and sterling crosses. Now, when you are looking at this event, right? Same for the RBA for that matter. We know what's happening with the US dollar, right? We've got the cards on the table there. We can see what's happening on the majors. So when it comes down to some of the crosses, obviously trading Aussie sterling this week may be problematic, maybe not. But just be aware that you're not going to see clean moves because there's a bit of discombobulation around these central bank meetings because now they're all raising interest rates. They've all got forward guidance. They're all having press conferences and these things. So you can see a little bit of market price action chaos following these events. Now, where it always gets to, it's the big one for the week or the first week of the month, excuse me, is the US non-farm payrolls. Now, we've got also every second month, the Canadian employment numbers come out at the exact same time, right? It's a calamity because these are two major economies or countries and two major events. Having them released at the same time, tricky, right? This is where you can see dollar CAD have huge moves because if the Canadian employment stays strong, US employment's weak, then you get these massive big shifts in dollar CAD. The volatility around that, it's pretty epic. All right. So, but the economies are pretty close. So you don't usually get a huge disparity, but they are at a different stage of economic cycle. So we might see something weird on that. What I'm trying to highlight is this is a major risk event, whether you're looking just at the US numbers or the Canadian numbers, you got to really have an organized plan here. Okay. So just be aware of that. The CAD IVPMI numbers coming out afterwards may even be an easier trade than just the Canadian numbers. So, but that is so epic. Like these two things combined, it sort of almost washes out the opportunity. But what we will see is when you come back, so we've got the RBA, we've got the Bank of England, right? These central banks. So we'll get some clarity around what those specific currencies are doing. Now, then it's up to us to work out what they're doing against other crosses, right? That's where the trading opportunities may be. So we'll see some corrections here. Now, this 0.5%, you'd have to say it's factored into sterling. Same with the Aussie, right? So don't go buying sterling straight away. It depends on what they're saying. I still think it's early doors for both of them. Like the Fed, they will be coming out, probably putting their foot on the throat of the economy and saying, you know what, if this doesn't cool down, we're going again and again and again. They've got to really drill this home to try and get these economies to slow down. The unfortunate thing is they're not really doing much about the QE that's in the market. They need to pull that out first because otherwise we're back to where we are. Right, so that's the week as it is. Now, if you're looking at the data here, right, so just have a look. Obviously, what the previous number was, but really the forecast is the key to it. Now, Aussie 1.85%, as I mentioned, 0.5% factored in. So as you go through the numbers here, and this is a good one here for the Kiwi data. Now, as I said, this is a good trading opportunity in general. But then if you come back to reality and you go, okay, well, what's the Kiwi liquidity like? It's not very good, like the Swiss. Okay. And then you're going to have extreme volatility. You really need some technical levels to assist you in getting into the trade or out. Right. And don't think the US dollar uptrend is finished, because it's not. That's just another pause as we wait for these other central banks to have their say, and then we can get some things out of the way. Now, one other thing for those stock traders, keep an eye on the earnings. Okay, earnings calendar is going to be important, obviously, for specific stocks. You come down into, what day is it? Wednesday. Yeah, I'm going to shimmy through Wednesday, because once you get into Thursday, we're starting to get into, as I mentioned, US durable goods, factory orders, ISM non-manufacturing. Like, it's a big day for the dollar. Don't think there's not big US numbers out besides the non-farm payrolls. Non-farm payrolls gets all the attention, okay? But you know what? It's not the be all to end all, because and everyone promotes it as the massive trading opportunity. But I can tell you what, there's a lot of terrible stories around that. Once again, earnings all over the place. I'll tell you what, TradingView's got a great earnings calendar too for those that want to trade the stocks. Coming into Thursday, okay, now, so the Bank of England, right? You really want to get yourself abreast of what's going on here. So the vote count, okay, that is an important thing. At the moment, you can see a massive consensus here. They all reckon they should go, and they are going. So if there's a slight change in that vote hike from the members, that can lead to like maybe we're getting close to the top. I think it's a bit early yet. It's only when interest rates are only going up to 1.75, so it's not like it's going through the roof. But it's worth keeping an eye on that. Obviously, 1.5 is that what they? I think it was 1.75. But have a look at the bank rates. Then obviously come back down here. Now on, you've also got a bunch of speakers. Most importantly, Bailey. Okay, post policy announcement press conference. Okay, that is very important. Obviously, as we saw following, as I was saying, following the Fed, Jerome Powell comes out with the real clanger and really set the market alight. So that could happen there. And ECB, well, they've got a climate change and monetary policy. That's just more of a general speech. I wouldn't be getting too excited about that. Adidas, for all those sports fans, got their earnings report coming out on Thursday. And then you come into Friday, right? So obviously, this is a major event, and you've got the data here over 2 pages. So you are looking mainly, there's a couple of key things here. The non-farm payrolls change, right? The unemployment rate is the next one. And then from what we've been looking at over the last few years, okay, so this one here, average earnings, right? You want to keep an eye on these 3 components. And then you've got all the peripheral components, right? All these other parts, they all add up to the picture. And you know what? If you get some big disparity in one of those, it can upset the rhythm of what's happening. So don't forget, we are looking for, okay, slightly weaker numbers here. Okay, the rate to be the same and earnings as expected as well. Now, the market's going to be looking for some signs that the interest rate hikes thus far are impacting. I still think it's slightly too early, right? If you're trading dollar CAD, obviously, oil falling dramatically is going to have an impact on CAD and maybe make this too difficult. But you've got the employment details here as well, plus the Ivy PMI there as well. So basically, it's a huge week. All right. Now, to start the week, I don't know, it's coming into the Monday evening in North America. You can see what's happening in the equity markets, just a slight dribble off. This is like the market is in super pause mode. Right? They're like, what are we doing here? Okay, there's so many big events coming out that no one's going to rush into the market this week, right? If you see a big movement on an instrument, it's probably some massive fund has bought the data and going a bit to town on it. So I know this, I didn't want this webinar to go too long, but if you're looking at the instruments here, right, you've got some great technical levels. The dollar index, okay, you can see, I love the fact that the equity markets are bouncing back here. It's like nothing's happened. I can tell you the Fed hiking cycle is not over. The massive down move in equities are not over. But basically, we're getting a recharge across the board now. Now that all the other central banks are raising interest rates, you will see a lot of the instruments start to rebound to levels where we can get long dollars again, right? The US economy is still the key economy. Until they pause, that's when the dollar starts to dive. And I think we're a long way from that. So this global page, okay, gold a little bit higher. Bitcoin's had a little bit of a relief rally. Okay, commodities up. And oil here you can see going down. And like, you need to get some confidence around what's going on, right? I was just having a look at oil and you're like, okay, and think about what's been happening across the board. Oil's been up for some time, right? So if I just go back, I can see this low over here. What I'm thinking is, well, if oil's been up here, there's got to be some levels on the downside here where this thing's going to get crushed. So if I just come across, line this up, and you wonder where these things stop sometimes. Okay, that's not right on the level. Let me just make that red. And I like being exact with this stuff. Okay, so you're having a look at this. I'm like, okay, there's a low, got the second low. And, oh, lo and behold, it's like shock horror. Okay, where does it stop? Right on the support trend line. Okay, now this is where I start to get a bit more confidence with the market. I'm like, right, so oil, it's tried to push through this level. It's been going through the roof, right? And we've got a pretty good level here at 92.70, right? So for those commodity traders, that's worth keeping a very close eye on. Now, do I think oil bounces? I haven't done anything here yet with regards trying to work out, okay, fundamentally, is oil going down or up? But I can tell you technically, it's going to be under pressure through that level. And it's right on the technical support line. So that's something you want to be doing as you go through these instruments at the start of the week. Isolate the instruments that do make sense, right? So if you are on the Discord, for example, right, and say we're looking for strategy ideas, these should be popping up. Strategy ideas Tuesday, like definitely by Wednesday, we'll start to see more technical structure, and that's where the strategy builds from, right? We're looking for a build-up of pressure on the technicals, and that should tell us a lot about what's going on. Now, so RBA raising rates, Bank of England raising rates, employment numbers out of Canada and the US, right? Now, look at the dollar index here. This is what you get in a trending market. You get loads of support levels. And see how this puppy's working through them, but there's loads of them, right? The next support level is here. There's another one behind the dollar index here. So you get these fanned levels of support. Now, it's going to be hard work for the dollar to go down. To me, I'm still dollar bullish, right? The like dollar Swiss, this sucker just won't give up, okay? But I've got to say, dollar's got to bounce on this at some point. To me, I'm on dollar Swiss watch, even though it's like a bit of a vague watch because it's got such a beautiful structure. Dollar yen, okay. Well, I saw that post from Jonathan yesterday about why dollar yen was going down. Great job finding that article. Actually, gives us more insight around what's going on. But you know what? I'm not really interested in dollar yen at this point. But sterling yen and Aussie yen may be a big focus, right? So keep an eye on that. Dollar CAD. Okay, sort of hit a bit of a crunch level. Of course, with oil going down, it's going to put a bit of upward pressure on dollar CAD. The euro is coming back to some great levels. I'm bearish the euro, right? Like when did the story about the gas issues and everything just die, right? All of a sudden it's just disappeared because there's other news out there, right? When there's other news, the news services pump that, and then they come back to the nasty stuff that they can promote when that all dies down. So really, I can't see the euro going, well, I can see it popping up towards 104, but you know what? It's going to depend on the US numbers more so than anything else. Sterling, well, that 0.5% is already factored in. Same with the Aussie. Are we at the top of their run at the moment? It depends on their forward guidance. And even with their forward guidance, if they come out and say they're going to be aggressive, yeah, that's great. But I tell you what, in a week's time or 3 or 4 days, everyone will have forgotten that. When the US numbers come out strong, they will get belted again. Kiwi, obviously the employment number is the key there. So what we've got is, you guys may not have seen this because the markets are just reigniting and they're coming back to a more of a normal formality, right? So what I'm talking about there is we're starting to see like the big run down here on the dollar and then the bounce back as the other side of the instrument, the euro, comes back into play. Same with sterling, Aussie, Kiwi. What it does is it gives us a huge range of potential trading opportunities. Now, so when you are looking at, say, the equity indices, right, sterling, right, FTSE, you got to look at the All Ords, the central banks are raising interest rates, right? This is the interest rate hike is factored in. So the forward guidance may be impacted on the equity markets first and foremost, right? So with no... so when the US equity markets kick into gear, it's around the US numbers, right? So at the moment, that's why these things are laying down a bit, because the focus is on other equity markets just for the moment because the central banks are due. Okay, so make sure you know where to follow things. The cryptos, I'll tell you what, they're hanging in there. I think they've weathered the storm. I don't think it's over for the cryptos yet, but they are reshaping and people are getting more confidence around those. Stocks, well, I'll tell you what, there's with the earnings season, there's a lot to go on with this. So make sure you keep a very close eye on the stocks. Commodities, well, obviously oil is like the big sort of story here with it rolling over and about bloody time. I tell you what, going to the petrol bowers is a bit of a nightmare at the moment. Gold sort of higher and silver, no surprise there. Copper up, starting to rally as well. So there's iron ore down here. It's where it is. So there's plenty going on. One thing I wanted to show you was see how gold, right? Okay, is going up, and they're buying yen. Like, to me, you'd think it'd be some sort of safe haven play. I think Lee was sort of mentioning that. If you come over here to the equities, right? Have a look what the volatility index. It's bounced a little bit, but it's sort of not far off where it's sort of like normal market conditions, which is usually around sort of 15, 20. So like there's things happening when there's central bank meetings. There's increase, focus on some of the safe haven stuff just momentarily. Don't forget, there's a whole range of like global sort of conflicts about to sort of kick off all over the place, from China with, again, with the US. I can't remember who was going to Taiwan, but then you got big trouble in Europe. Obviously, Russia's been kicked around the place. There's plenty going on. So don't get distracted by what else is happening yet. We have got some serious fundamentals. Now, when it comes down to getting yourself prepared at the start of the week, right, the key to it is just follow the daily trade routine, right? Because you're running which ones. Just come back, go through all the instruments. Now, if you're not comfortable trading equities or stocks or the different asset classes, focus on the asset class you are familiar with. Get onto a format where you can see these instruments over multiple time frames, and you can see what's going on here. Like, to me, euro, right, still broken down here on a number of instruments. See here, 103.50. It's coming back to a big sort of double bottom here. Then you got resistance above it. So to me, the hourly charts is where I'll look to get to execute. To me, at the moment, is this level here valid? Well, I have to wait to see what else is happening around the place. To me, it's a bit early for me to be jumping in and going, oh yeah, I'm getting short here. Like, no, there's more things coming out before euro falls, right? So don't get yourself excited, but you should. This is where you start to build a bit of a trade plan and go, you know what? Because I'm sort of bearish euro against the dollar in particular, right? And I've got this level here where it's broken through, so I can get rid of that. So if anything, I'm looking to get short. Where are my levels to get short? Here, or maybe even better, a little move up to here and then down, using this double bottom here as the crux. So to me, right now, until things change, until the US numbers change, I'm looking to get short euro. Am I wrong or right? Who knows? Only time will tell. But I tell you what, I'll have a much better idea when I start to see a few of these US numbers drop. Like Wednesday, I think it was Thursday, you got Wednesday, the ISM non-manufacturing, the durable goods, factory orders. This is the sort of, as I said, the building blocks for euro. But go through your instruments, whether it's gold, oil, whatever it might be. Do the homework. Find out what is key to actually moving around. What's got the best setups? What's got direction? That'll lead you into working out. So on a Monday, you may come through, go through your templates, and you may have like, say, 6 different instruments on your pad next to you, right? That you're using. You're writing down, okay, Euro's good, Swiss maybe. You may have about 6 or 7 trading opportunities for the week. As it comes through Tuesday and into Wednesday, that list should be refined down, probably down to like 2 or 3. Then you know exactly where to focus, what numbers to look for, and those sorts of things. This is how you're going to structure your overall plan, right? And you might be looking at this going, okay, don't get yourself all bent out of shape. Don't pre-plan the trade. I'm definitely trading the Aussie today. The RBA cash rate's out. No, you do your analysis. If the opportunity comes up and they say the right thing and you're there, lucky enough to take advantage of it, well, that's well and good. That's an opportunity. But you don't come in with pending orders and all this, just hoping they say something, right? That's just idiotic. So make sure you just keep an eye on this. As we go through the week, right, you are going to be able to piece together what's happening on the US equity markets. As I said, it may well be the Aussie and UK equities that sort of give us a kick initially, right? Because that's where the central bank activity is. Once these are the RBA and the Bank of England are out of the way, we have US numbers, and that's when the US equities will be the major focus. Now, that could tell us a lot about a risk-on, risk-off profile, etc. right now, the markets are feeling pretty good. Crypto's up, everything's up. Commodities, it's a bloodbath, right? They've had a pretty good time in the sun of late. So they are getting hammered, as is, well, oil is a big part of that commodities index. So you can see the commodities and the oil trade pretty much lining up. All right, so that's where we are, guys. It's a pretty exciting week. You know, if you are coming back, make sure you check the data. Let me just get that Discord back up. All right, now just to give you a bit of an update, I have actually gone through and updated a lot of things here to try and make it easier for you to navigate. For market updates, this is the key part, right? You've got the this week's data. Thanks, Josh, for putting that in. This video will be in here. Obviously, the News Corp previews, check those out. And that's pretty much where the focus is. As you come through, I would say definitely end of Tuesday, by Wednesday, this area here should be lighting up, right? Don't be afraid to sort of pipe up. I think you guys know the value here of contributing, because, you know, your ideas and structure of what you're analyzing will be different to someone else's. So you can actually get a lot of value from sharing ideas. That's what happens in the dealing rooms. This is going to be pretty awesome, because now we are fully like kicked into gear with what's going on. You're going to find a lot of valuable information here, right? All right, guys. Anyway, good stuff. And don't forget, this is it's all about building capital. This is a week where we get some key directional activity. We're going to be able to build some capital and maybe lead into bigger trades, because once we get the direction from the central bank, right, the interest rates are already factored in. We want to know what they're going to do next, because that tells us what data is going to be impacted the most. All right. I've probably left out some stuff I was going to tell you, but stick to the daily trade routine at the start of the week. As I said, you should have 6 or 7 different instruments across asset classes that you go, you know what, this one here's got good direction and entry levels. Some of them may just have direction and no entry levels, right? So they might be your grayed out ones. But anyway, follow that routine. It will guide you into the opportunities. And then once you have those, we'll share them across the board here, and you might get some clarity from the other traders as well. All right, guys, have a good one. Cheerio.